Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hi guys, this is Aditya Vora here. Hope you are doing well. We come from a land where gold has always dominated our preferences for jewellery buying. Be it Diwali or Akshaya Tritiya or gifting your daughter during her wedding, gold has dominated preferences of Indians. After all, gold symbolizes wealth. While I believe that Indians' love for gold will be eternal, however, the story in the Western world, especially North America and other European countries, is different. Gold there is only bought by investors while diamonds are bought for consumption. In short, what gold is to Indians, diamonds is for the Western world. The company which I am going to talk about is a supplier of diamond jewellery to leading global retailers, departmental stores and wholesalers. Its products include engagement rings, wedding bands, anniversary rings, bridal sets, earrings and pendants. The company derives all its revenues from export of jewellery, with USA contributing 95% of sales. The diamond and jewellery business has elements of seasonality, with third quarter witnessing positive momentum from Thanksgiving and Christmas, which is the festive season. So, the company which I am talking about is Goldiam International Limited. Goldiam International started as an exporter of cut and polished diamonds. However, over the years, the company's business model has evolved from a commodity business of diamond manufacturing to forward and backward integrated diamond jewellery production and sales. Before I give you 3 reasons why this company is expected to do well in the medium to long term with hiccups in the short term, let us talk about few concepts in the diamond industry which are very important to understand the scope of the opportunity. Lab-grown diamonds are man-made carbons while natural diamonds are pure natural carbon atoms. It takes 6 to 8 weeks to grow lab-grown diamonds using machinery, while as you know, the natural diamonds are found under the earth's crust. In terms of appearance, the lab-grown diamond looks the same as natural diamonds. Trust me, you and me will not be able to make out the difference between the two. And as per research, the size of the natural diamond market is $79 billion, while the lab-grown diamond barely accounts for $2 to 3 billion. Imagine if you could buy 2 diamonds for the price of 1. The pricing is the USP for lab-grown diamonds. With all other characteristics being the same as referred in the table above, millennials are moving towards lab-grown diamonds. Also, when the cost of a lab-grown diamond is 40% lesser, the addressable market automatically expands. Lab-grown diamonds account for only 3% of the overall jewelry sales in the US and are expected to account for 10% of the diamond market in the US by 2030. In my view, the opportunity has just started in terms of size and scope of the market. Now that we've spoken about the basics of the diamond industry and you have a sense about the lab-grown and the natural diamond, let us talk about the company in contention, which is Goldiam International. Now, Goldiam International's product portfolio has 75% of its sales coming from natural diamond jewelry, which is basically the bread and butter of the company, while lab-grown diamond jewelry accounts for 20% of its sales and the remaining 5% comes from lab-grown diamonds. If you look at the margin profile, natural diamond jewelry gives it a 18 to 20% operating margin, while lab-grown diamond jewelry has a 30% operating margin, and the highest margins of 45 to 50% are when they sell lab-grown diamonds, which is only 5% of the sales. If you look at the geographical mix, North America accounts for 95% of its revenues. So the question is, why do I like Goldiam International? Let me give you 3 reasons for that. The first being, I see a massive growth opportunity in lab grown diamond jewelry going forward. The market is going to explode. The share of lab grown diamond jewelry has increased from barely 10% a year ago to 20% and is expected to go at least 30% for the next couple of years for Goldiam International. Also, lab grown diamond jewelry fetch a higher margin of 30% as compared to 18 to 20% for natural diamonds. Secondly, what Goldiam has done is that it has acquired 88% stake in a company called Eco-Friendly Diamond, which is engaged in the growing and manufacturing of lab-grown diamonds. This is a masterstroke as it gives Goldiam an edge against its competitors who outsource jobs like growing or cutting lab-grown diamonds to outside vendors which do not have uniformity and they run into quality issues. Post this acquisition, not only does Goldiam get to keep a quality check, but also gives it a strong operating leverage and higher margins due to backward integration. The entire supply chain in lab-grown diamonds is controlled by Goldiam. Currently, Goldiam sources about 20 to 25% of the lab-grown diamonds in-house via backward integration. To increase the sourcing of lab-grown diamonds, its subsidiary Eco-Friendly Diamonds is undertaking a Rs 10 crore capex, and in FY24 the management expects that the capacity is likely to double. And lastly, if you look at the financials of this company, the company's EBITDA margins increased from high single digits during the FY10 to FY16 periods to roughly 19% in FY22, while the return of equity stands at 21% and the average ROC ranges between 25 to 30%, with 30% being the highest in FY22. The company remains a debt-free company as on September 22 with strong balance sheet. Further, the company has been generous in returning cash to shareholders in the form of dividends and buybacks. The management endeavors to maintain a minimum payout ratio of 50% of standalone net profits either in the form of dividend or buybacks. So now that you've got a sense on why this company makes the cut for a good investment opportunity, let us talk about the concerns which people can have. Now, with 75% of the product portfolio still coming from natural diamond, major apprehension a lot of people had was whether lab-grown diamond jewelry will grow at the expense of natural diamond for Goldiam. Well, that's not the case. Lab-grown diamond jewelry addresses the white space in the jewelry industry and has only expanded the target audience. Lab-grown diamonds are creating a niche of its own. The end customer who purchases a lab-grown diamond is someone who has never bought natural diamond jewelry in the past as they could not afford it. The lab-grown diamond market is creating a category of its own by converting customers who bought Swarovski diamonds, silver jewelry and smaller different color stone jewelry. This gives Goldiam an additional revenue stream through the lab-grown diamond market and increased penetration. One more concern is that if you look at the operating margins, they have gone up from high single digit to roughly 20% currently. The question is, are these margins sustainable going forward? Let us understand why margins improved in the first place and then address the sustainability part. During the early part of the decade, Goldiam was largely dependent on wholesalers for selling its products. However, over the past few years, it has built strong relationships with global retailers, maybe 40 to 60 stores like Macy's and Target, and departmental stores also like Walmart. The retail to wholesale mix currently is at 80 to 20. This is one of the reasons for sharp improvement in operating profit margins. Apart from the shift from wholesale to retail focused supplier, the company is also focusing on online sales channel. Goldiam's share of online diamond jewelry sales is at 20% compared to 5 to 10% in the industry, while the traditional brick and mortar category accounts for the remaining 80%. A change in business model along with high margin lab grown diamonds will keep margins steady at these levels. Lastly, with 95% of sales to North America, and all of us know that the US economy is in recession and is expected to be there for some time till the Fed stops hiking rates, why am I recommending this stock? Well, two reasons. Firstly, if you look, the main pressure is coming from the natural diamond jewellery market, which is 75%, but is expected to go down as the share of lab grown jewellery increases. While I agree, for the short term, the pressure in the demand will continue due to the inflationary pressure and postponing of buying, lab grown diamonds will relatively take a lesser hit. Secondly, there is a reason why the stock has fallen by 30% over the past 1 year and is trading at a price to earnings ratio of 13 times. To put the numbers in perspective, the company did an EPS of Rs 9.6 in FY22, and during the first half of FY23, despite recession and weak demand, the company did an EPS of Rs 3.7. Now, assuming the same muted trends continue and it closes FY23 at Rs 8, and the reason I am saying Rs 8 is because the second half of the year will have Thanksgiving and Christmas too. For FY24, conservatively, I am taking an EPS of Rs 8, which is the same as FY23. That means no earnings growth due to recession in the US. Still, at Rs 8, the stock is trading at a PE multiple of 15 times forward FY24 earnings. Now tell me, for a company which has entered a high margin new product and supplies to the top retailers like Macy's in the US and other marquee names, I believe the valuations are cheap. It is during bad times in the industry that good quality shares should be bought. So friends, that was Goldiam International for you. Thank you, and do let me know what you feel about the company.